is our first FOMC live that we're doing. But anyways, we're about 10 minutes away from the decision. So let's see what's happening. Markets have been pretty okay. You are seeing the Nasdaq up about 77 points. The Dow is up about 151. The Russell's up about 19. So that's about 1% on the Russell. So the Russell's doing way better. That's one good thing that's currently happening. Let me go ahead and put a pin in so we have that. I mean, most people are also thinking that he's going to be dovish. So let's see. I'm not sure if that's going to happen. I'm pretty sure that he's going to be dovish, but he might also increase the inflation numbers, right? So that's something that we need to keep in mind. Let me just see if you can hear me. Yeah, I think you should be able to hear me now. Okay, I think we're good. Everything seems fine. Are we? Not sure. Hold on. Anyways, just go ahead and say hi so I know who everyone is. Anyways. So yeah, it is looking like possibly we're going to be seeing, you know what, he could actually come out and cut rates. The closer I'm getting to that, it is looking that way, but it'll look like he gave in to Trump. So I think he's just going to stick out of that. But I still do think that there is a high chance that the speech is dovish. One of the things that I'm trying to see is whether he's going to be increasing the inflation expectations. Remember, we do get something called as the summary of economic projections. That is the one that's important here. They should be bringing their GDP forecast down because of what happened in Q1. And they might be even doing that when it comes to inflation forecast would also have to probably be picking that up. So that looks more likely that the Fed is going to pick that up, going to be putting in the inflation numbers. We're about 9 minutes away to go, maybe 8 minutes to go to see what happens with the Fed at the moment. So we're going to see that. Let me just go over and see. So we did get President Trump come out and say some of the things about too late Powell when they asked him saying, is it too late for Iran to come and start talking? He says the only thing that's too late is Powell. Yeah. Anyways, so traders right now are scrutinizing the Fed rate cut projections and they see about 2 rate cuts for the year. So let's see. I'm going to go through the FOMC meeting as well when it happens. I'm not going to be playing it live on YouTube here, but everything that I see on the Federal Reserve channel, I am going to be sharing that with you guys and my opinion. So we'll watch it together and we should be able to see what's exactly going to be happening at this moment. Okay, let's see what else is going on right now. So Nike was supposed to be starting their, I don't know, whatever brand with Kim Kardashian, but that doesn't seem to be happening. There's some production delays. Still expected to debut sometime later this year. Anyways, good for them. Let's go ahead and see what else is happening. Everyone go in and say hi. And there is no live tomorrow because the market is shut. But make sure you subscribe because on Friday when we go live, we're going to be getting options expiration. Remember, like we've been saying, it's triple witching week. So on Friday, you're going to get the quarterly, weekly, and monthly options expiring at the same time. So that's going to be fun to see what happens there. Anyways, how many of you actually do think that he's going to go out and cut or at least be dovish, right? Go ahead and vote there as well, please. I'm going to put an end to that poll as soon as we finish the press conference. Fascinating. Mm. So I do think he's going to be asked about the way that the market is going to be reacting to the new Middle Eastern tensions that's going on the Iranian front, because that has had an effect on the price of oil. Remember, America might not be fighting in any of these wars, but they are part of, I would say, two and a half wars. One in Ukraine, one now being the Israel-Iran issue, and then half a war what's being fought in Gaza, or whatever remains at this moment, right? So that's currently there. So Iran has still been firing missiles because the Iranian media that I've been seeing in the past few hours as well, that this thing is continuously going on. Iranian missiles are fired at occupied territories. Sirens are sounded in Tel Aviv and many other areas. So this thing's going on. Uh, okay, so this is good news. I mean, we still have about 5 minutes to go, so let's go ahead with some of the news that's happened. Remember, any company that's on the side of President Trump or his administration will always be given favorable outlooks. So that's been happening. One thing that's been happening is Starbucks has been pretty much pledging to align their company's menu with something called as Make America Healthy Again, which is what the Department of Healthcare and RFK Jr. have been talking about. So they're focusing on lowering sugar and cutting artificial ingredients. So Starbucks reiterated its ongoing commitment to health focused offerings. So that could potentially give enough break for a company like Starbucks to continue higher, right? It's up about 0.66%. I mean, what I do believe is if it does take out the 95, 96, you can see it go into the $100 and maybe even the 115 levels. It's got a bit of resistance at 100, but once that's taken out, I'm pretty sure it goes back to 115. Let's see what else is going on. Nvidia is up about 0.75%, 145.20. Uh, yeah, 21,805. So the market's just, if you go in and look at the 1 hour chart, we've just been gyrating around from support to resistance, just roaming around in a particular bandwagon, right? A high of 21,870 and a low of 21,700. So that's about 170 points, 0.8% of a move that's been happening. Nothing too incredible. I think everybody's just waiting out to see how does these things get played out when it comes to the Fed. Who knows? Maybe he cuts, right? And I think the market would rally if that happens, but never know. Never know. I don't know how many people would think that he's being coerced into doing this. So that could be one other thing, right? Hmm. Israeli military says missiles launched. Okay. I don't know. It says Iran to temporarily impose restrictions on internet access. But the fascinating thing was a few hours back, especially earlier in the day, I was looking at cases where the internet was out completely in Iran. So maybe there was a cyber attack. Hmm. Got to figure out the 10-year treasury, because that's what is important at this moment, is at 4.367, right? We're trying to see if we break the 4.3, 4.25, maybe during today's speech, maybe during the earnings. It does help. I'm also going to be getting the speech and the statement. So we should get that. And then we can analyze that until he comes and starts talking. Hmm. Let's see what is currently going on. You guys think he's going to be cutting though? Because I don't really think what. As we get closer, I'm just like maybe, maybe that surprise is one thing that's left. Yeah, give me a pin command asking. Let's see. Mm-hmm. US official to Al Jazeera, US forces in the Middle East have taken maximum security measures. Okay. Anyways, guys, what about Barclays says that if Iranian oil exports are cut in half, it would expect Brent to move to 85. So let's just go and look at Brent, and I'm also going to be going in and checking what's happening with. So the federal funds rate data should be out any moment now. Let's see. Okay, we have no cut, so we're staying steady at 4.5%. There is no cut, so that is one good. At least we put an end to that. Okay. Okay. No changes in rates, no changes in the statement, very few. Two rate moves by the end of the year. So two more than in March. Okay. So the Federal Reserve, they've lowered their 2025 GDP estimate to 1.4%. They've lifted their inflation to 3%. That's what we were expecting. And unemployment remains low, right? So that is also currently going on. So they're not expecting the unemployment numbers to start getting worse. It's not something that they're looking at. So the Fed leaves rates unchanged. So we're good on that surprise there. Are you seeing the bond yield? Anything happen? No, nothing on the bond yield. The bond yield's been staying steady. Let me go ahead and see. So Nasdaq's not moved that much. Still 92 points up. We're pretty much there. So we're all just going to wait out to see what Trump says. So they hold their benchmark rate in 4.25 to 4.5% target range. So let's see if that works out. They didn't have any dissent, so it was unanimous, which is actually a surprise. That's the surprise because I remember Michelle Bowman being one of the Fed presidents having a dissent vote at one point of time. I thought that might continue. There might be more people who want to, at least some of them that might want to cut. But nobody wants to. Cool. Hmm. So the first move on the index is lower. We were at 24,846. We're down about 70, 80 points, maybe close to 100 points from the highs. So let's see. We're going to be also getting President Trump hitting on this, right? He already said that he was expecting this to be a no cut scenario, but so the game of the dots, right? And their summary is the Fed forecast two rate cuts, which is 50 basis points in 2025, forecast one rate cut in 2026. So I don't know what they're smoking there, but they believe that they're going to cut only once in 2026 and once in 2027. So I don't know what's happening there, but they do believe that, which is fair enough. And interest rate futures price in 71% chance of Fed cut in September. It was 60% just before, and 46 basis points in rate cuts in 2025, little changed from the Fed statement. So gold's been edging up. So let me actually go see what's happening there. That might actually be fascinating. Sean says, you think he would cut? No, under pressure from Trump. Nah, man, didn't happen. I wish he did. It would have actually been a lot more fun to see what the world says. But I guess no, not today. Let's see. No surprise here. Oil just changed the game. Yeah, but I'm just gonna go and see on the statement if they do speak about anything about geopolitical tensions. So what they say in their statement is, although swings in net profits have affected the data, recent indicators suggest that economic activity has continued to expand at a solid pace. The unemployment rate remains low and labor market conditions remain solid. Inflation remains somewhat elevated. I mean, I don't know what he means by elevated, because that's one thing that I'm not ready to agree with, is that inflation is it is heading lower. I mean, it is near the 2% target. So I don't know what they're saying about that, but let's see. Let's see. Yep. So you are seeing the Nasdaq lower now. We're down about 100 points. So that's that. Let me actually see if I have some more data. Jerome Powell and the Fed leaves rates unchanged at 4.25 to 4.5. The SEP is where Powell is pretty interesting to see what happens there. Interest rates ending 2025. So 225 basis point cuts is what they're expecting. Growth of 1.4%, down from its previous 1.7%. Unemployment rate of 4.5%, up from its previous 4.4% forecast. I don't know why they're expecting PCE inflation that they're saying is in 2025. They're expecting their March projection, it was 2.8. So they're expecting inflation to pick up because of tariffs. So they're expecting it at 3.1. But in 2026, they're dropping it down to 2.4 and then 2.1. So if inflation is lower, GDP is higher, and the unemployment rate falls, why are they saying they're only going to be cutting once in 2026 and once in 2027? And in all essence, I mean, don't buy that story, because in 2026, you don't have Powell. You're going to have a different chairman who's just going to come and do whatever Trump wants him to do. So, anyways, that's besides the point. Yeah, so this is what we were expecting, right? Change in GDP was expected to grow at 1.7%. Now it's going to grow at 1.4, according to them. They're looking at a uptick of 0.1% on unemployment rate. So 4.4 is going to be going to 4.5%. So at the moment, that's what it's looking like. 9 of 19 officials projected fewer cuts than the median 50 basis points, with seven seeing no more cuts in 2024 and 2 expecting just 1 cut. So either the entire Fed is living in a different bubble, or I don't know what's going on here. But so these are the few things that they changed. Earlier, the lines were the unemployment rate has stabilized at a low level in recent months. That's been changed to the unemployment rate remains low, right? Cool. Uncertainty about the economic outlook has diminished but remains elevated. Uh, Diminished but remains elevated. So, okay, that's one line that's been changed. So pretty much nothing in that whole statement has changed. If you see a lot of it, this might just be one of the smallest changes that I've seen happen on the Fed statement. It's just 2 lines that changed. One was about the unemployment rate, which they're now saying stays low, and uncertainty about the economic outlook has diminished but remains elevated. So the committee is attentive to its risks on both sides of the dual mandate and judges that the risks of higher unemployment and higher inflation have risen. The dual mandate and what is required for it is just removed. So cool. I mean, I still think the market will just gyrate around till Powell comes in to speak. That's when the big money is going to start making any kind of moves, whatever they want to. Let me see a few of those questions. The change from higher for longer to higher forever. If you actually think about it, right, the thing is that this is his way of just being hawkish till he leaves, which is 2026 March. And even if he doesn't cut right now, you're going to get a Fed chairman that comes in and starts cutting pretty in 2026. The next guy that's coming in there, if it's Lutnick, Besant, whomsoever it is, even if it's someone working at 7-Eleven, the guy is just going to do whatever Trump wants him to do. So that is going to happen any which way. So do one. I mean, it won't be higher forever, but at the moment, considering the amount of wars that we're facing, it's might as well make sense to wait it out for a bit. Sean says, you think if oil rises, they might do like an emergency? 100%. They have no choice, but they have to. Under the scenario that oil rises, they have to cut. There is no two ways about it. And by oil rising, I mean $100 oil and above, and for an extended period of time. You can't see oil just hit 75, 80, and these guys are going to cut, or like hit 100 in the next 2 weeks, and you are going to see an emergency cut. No. If America does enter a full fledged war, very high chances you'll get emergency rate cuts. Is that going to happen? I don't think it's going to happen. I don't think emergency rate cuts are going to happen any which ways. So that necessarily is not really at the moment that much of an issue. Doesn't seem like that's going to go down that way. Maybe he's doing it out of spite. Mm, I don't think so, man. I actually do believe that he's just waiting it out to see what happens. How bad can the shit get from tariffs? And now with these Middle Eastern tensions, will inflation actually get picked up? One thing I did see was a company called Lennar, right? They're one of the maybe by far one of the biggest American home construction companies. I would have expected them to face a lot more of issues when it comes to tariffs, but they came out and said that there's been no impact to their business because of tariffs. So don't think any of that is going to be happening at this moment. Anyways, let's go ahead. Let's see what. Yeah, this is a guy that I would like to see. But so about 7 out of the policymakers, 7 of them penciled in no cuts for the year. So I don't know. It's it's weird. It's actually weird. What's 7 participants see no Fed rate cut versus 4 in March. So you've had more Federal Reserve members come in and say they're not ready to cut for the whole year. 2 forecasts of 1 rate cut versus 4. 8 see 2 cuts versus 9 in March. 2 see 3 cuts versus 2 in March. I don't know. I don't know why so many of them do believe in no rate cuts. It's weird. So maybe the spite thing that Sean's saying, maybe that might come out in the statement. Who knows, right? Maybe in one of those Q&As when they ask him saying, what did Trump and you speak when you guys met at the Oval? Considering that Trump came out and said the only thing too late right now is it's not Iran, it is Jerome Powell. Okay. Maybe I'm pretty sure Trump's going to tweet something. It's just, I was just scratching him to do that. Anyways, we're about 15 minutes away from the press conference. So I'm going to more or less give you like a running commentary when it does happen. Let's just go in and check a few things. Let's go ahead and end that poll. Looks like most people now voted for hawkish inflation fight pending. I don't really think that inflation fight is that much of an issue. I think if the inflation fight, it's easier to find out about inflation through uh, company earnings calls. It's simpler to get that kind of information out. That's an easier way of figuring out things. Usually you get to know a lot more stuff that's currently going on. Let me just go ahead and put in the link as well here, and then put in a comment so you guys have that as well. Remember, tomorrow's a holiday, and then on Friday we enter a lot of the options volatility. Okay, let me go ahead and see if I can find the. You'd want more rate cuts this year. I do think it would be smart to. I would say 3 rate cuts this year is not too much to ask for. It's just 0.25, right? It's not going to be that much of a difference. It's the trajectory that once they take the rate cuts, they take the trajectory of rate cuts lower and start cutting. They cannot just have it in a scenario where they hike and then cut and then cut and then hike. So they're just going to wait as long as it takes before they cut. And then when they cut, they'll keep going down that road of cutting. Now, whether they go too, they can overextend on that pendulum of cutting and hiking. So that's usually what happens. But let's see. Anyway, so the market is pretty much back to where it was from where we started, about 21,776 on the NASDAQ. Nothing really too fascinating out there. Let's see what happened to the dollar. All right, that will actually be, yeah. So the dollar did pick up a bit. We were at the lows of 98, where it, yeah, whatever, 98.115. So it's pretty much nothing. Hmm. So it says the unemployment rate remains low and labor market conditions remain solid. But I don't think labor market conditions are solid. To the extent the Fed believes it has time because of solid labor market condition, it kind of creates downside risks to the outlook. So I don't even think the SEP by itself is dovish. The Fed revised up unemployment by zero point 0.1 percentage points and core inflation by 0.3 percentage points. So, I mean, them saying that they're going to be cutting twice is just letting us know that, okay, there is possibly some chance that they do it. I don't know. The fact that they're revising their unemployment higher, revising core inflation higher, and then saying that GDP is lower, and then at the same time saying they're going to be dovish because the employment outlook looks great and jobs are okay. That's just, it's weird for me to believe that. I genuinely think they're entering a place where they have no clue what's going on. Literally no clue what's going on. But anyways, it's just one man's opinion. Yeah, we got about like 12, 13 minutes to go. So let's see what happens there. Let's put an end to that poll because we now know what's going to happen there. Let's put in a new one. Let's see what. Okay, let's see. Do you think the markets are going to be closing higher or lower? Right. Let's see. Do we get green or do we get red? Usually we have seen red every time that Powell does come out after a speech. The markets have tanked. Let's see. There you go. Go ahead and vote on that. Let's see what happens there. Recent indicators suggest the economic activity has continued to expand at a solid pace. I mean, I don't see that. I mean, economic data surprises have been negative by a very large margin. So I don't know what data they're seeing when it comes to that, especially when they're talking about anything related to employment numbers. It's not improving for sure, and neither is it too solid. It is deteriorating slowly. So that is exactly what's happening. Let me go check what's happening with our crypto's dead. So Bitcoin's at like 104,000, Ethereum 2490, Solana 144. That's pretty dead. Chinese markets are down in the red also, so they closed in the red. Oil was falling down. I know the lows for the day were at 71, but it's been swinging and it's back to 73.28. So that's where it is. Anyways, let me go ahead and see what is happening with, if there is anything more. Uncertainty about outlook has diminished, but still elevated. Sometimes I really fail to imagine how they come up with these things. There's going to be a lot more people on Wall Street that are going to start believing into what Trump is saying about this, because a lot more people are going to be expecting him to cut, and him not cutting this way is going to make Wall Street believe that he is actually late. So 21,767 on the Nasdaq. Let's see. 21,863 was the high for the day. So let's see how that plays out. I'm trying to see if we get some more data about. Trump just suggested that he appoint himself as Federal Reserve Chairman to replace Jerome Powell. Ah, fascinating. So Federal Reserve basically predicts that the American economy will enter stagflation thanks to Trump's policies. Basically, that's my reading of this. Shrinking economy, higher inflation, increased unemployment. So, and the tariffs are going to take a hit, right, at some stage. Now, if it does, it doesn't, who knows? But there's a likely chance that they take a hit rather than not take a hit. Let's see what's happening with a few stocks. Apple's flat 0.07. App 11 is down about 5%. Arms up about 2. Datadog is up about 4%. That's been actually on a very good run. I mean, all the way from April lows was about 81. It's almost at $130 now. Let's go ahead. Let's see what else is currently going on. Marvell is up about 7%. It was doing pretty well yesterday as well. Day before, it was up about 4.81% also. So Tesla is up about 2.5%. It's supposed to be launching its robo taxi service. So if that's able to happen, that's going to have a direct impact on Uber, the fall on Uber. So Uber's down about 1.33% as of today. So 83.63. If Uber does break down below 81, it could head back to its 74, 75 levels. So let's see about what happens there as well. Well, what about 5 minutes away from the Federal Reserve speech? So we'll do that live as well. 21,759 on the speed. So let's see. It'll mostly be during the Q&A when the market does move. So nothing's going to happen before that. Volatility index, it did hit 19.5. Now it's back to 20.5. Most likely will break 22. If it does break 22, we could be in for a ride. At the moment, the most important thing in the market is fall in oil prices. If that happens, you'll see the market go up. It's just China urges the US to use its special influence over Israel to ease the conflict with Iran and not expand it further. After US President put Tehran on notice with a demand of unconditional surrender on the nuclear issue. Trump warned Iranian Supreme Leader Khomeini that the US knows where he is hiding and he is an easy target. Though safe for now. He said his patience is wearing thin. Okay, cool. Mm. Shows a divided central bank weighing its next rate move. Yeah, that's the thing because some of them say two, some of them say no. So they're all so much over the place that God alone knows what they're actually believing in. I actually still do think he is going to be dovish, so that'll be fun. Let's see what happens there. 4.379 on the 10-year bond. So that's lower as well. Okay, so we're done with that. We're going to be getting the statement in about 4 minutes. The press conference in about 4 minutes. So let's see what he says there. I'll pretty much give you all the news that comes out here as whatever comes out verbatim, right? Need more rate cuts? Can write letters to him. Maybe listen to us. I wish. I don't think he's listening to anybody. I think the only time he's going to cut now is when Trump says don't cut. It's just a reverse issue that's currently going on. Especially the fact that them thinking that the economy is on solid footing. That's a stupid way to think about these things. It's not really a very solid economy at the moment. It is weakening. It is not improving. So question is, do they want it to continue weakening or do they want to keep going? Right. Anyways, so going into the press conference, we're at 21,782, up still 64 points for the day on the Nasdaq, 123 on the Dow Jones, and the Russell is up 1%. So that's Russell's had a good day because yesterday it dropped 1%. Today we're pretty much today's yeah. So we've been having the low and the open pretty much same. So that's always a good sign when you see that happen. Prices are heading higher, 2121. So it says how much basis points you think they might cut this year if it all goes tits up. If it all goes tits up, obviously they'll cut maybe four times in a year. But on a normal scenario, I think twice is what they'll do. That's my bet. Let me just go ahead and switch on the Federal Reserve. Oh, good lord. Yeah. Anyways, we got like 2 minutes before it starts. So this should be fun. I mean, imagine if the SEP is not so dovish, everything else doesn't work out that much, but eventually it is actually going to be a dovish statement. So yeah, what about what? A minute away. This should be fun. Anyway, so we're not doing a live tomorrow. We're going to be doing a live on Friday before the market opens. Unless something happens tomorrow, maybe I'll do a live again post market or during market. It has to do with the Iran Israel thing is the only reason why I would do a live, just to like calm everyone's tits down. But otherwise, nothing else. No reason to. So Friday is when we'll be doing it, and then you have the weekend. So make sure all of you guys that have not yet subscribed, go ahead and subscribe. You get a notification as well every time I go live. Like this one was not one of the lives that we do, but we do it when it comes to the FOMC at this time. So let's see, still 6,000 on the S&P 500. You should be seeing, yeah, maybe he is too late. Who knows? I mean, at the end of it, just be happy that none of us have rockets flying over our heads. So bullish, bearish, dovish, hawkish, it's all part of the game. Yeah, he should be coming in to speak at any moment now. There you go.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goal of maximizing employment and silver prices for the benefits of the American people. Despite elevated uncertainty, the economy is in a solid condition. The employment rate is low, and the labor market is at or near maximum. Inflation has come down a great deal, but it's been running somewhat above that 2% longer yet. In supporting our goals, today the Federal Reserve Market Committee decided to leave our policy interest rate unchanged. We believe that the current stance of monetary policy leaves us well positioned to respond timely to potential economic developments. I have more to say about monetary policy after hearing from the economic. Following growth of 2.5% last year, GDP was reported to have been down.
So first quarter GDP down is what he's still saying. So that's something that he's still holding on to ahead of potential tariffs. So fascinating. Microsoft's reportedly planning thousands more job cuts. Anyways, let me get back to Powell so I can give you some of the information. Yeah, they're still saying that their GDP projections are going to be lower. So that's that as of now. I don't know how he's saying labor markets conditions remain solid. It's just they've had revisions of 95,000 lower in 2 months. 95,000 jobs lost, revised lower. How is it solid? Current stance of policy well positioned to respond, inflation running somewhat about 2% objective. He's saying we're all at maximum employment. I don't know. Yeah, they're still expecting unemployment to pick up 0.1%. So let's see. The S&P has picked up a bit, but that's got nothing to do with what's happening there. He's saying despite elevated uncertainty, the economy is in a solid position. The unemployment rate remains low and the labor market is at or near maximum employment. Powell says the labor market is not a source of significant inflationary pressures, which means the reason that's the point I'm saying that it's the I don't know, weird. Trade immigration effects on the economy are still a concern. Trade and immigration. So let's see. Near-term inflation expectations have moved up. Tariffs are the driving factor. Most measures of longer-term inflation consistent with their goals. So it's interesting how 8 members are seeing 2 cuts this year and 7 are seeing no cuts this year. So I don't know what they're discussing so much about it to not have cuts at all, while they're expecting inflation higher than before and growth lower. So which doesn't seem to be the case that's going to be happening. But fair enough. Yeah. So you are seeing a scenario where the market is heading lower now. So again, this will require a lot more time to decide on what's going on. Still saying that they're well positioned to wait before they consider any other adjustments to their so near-term inflation expectations have moved up. Tariffs driving factor. Most measures of longer-term inflation are consistent with their goal. Unusual swing in net exports complicated GDP measure. Sentiment is soured, reflecting trade policy concerns. I don't know. I don't think he wants any more fights with Trump, so he's just going to keep it the way it is. He just doesn't want to go ahead and spoil it anymore. But I'm pretty sure one of these guys on the reporters is going to ask him as to what his views are, how did the meeting with him go. So let's see. The bond yield hasn't moved. It was pretty much at 4.34. Now it's at 4.38. So it's up 2/3 of 0.23%. So that's nothing too fascinating. But the markets are, I mean, at the moment they're taking it pretty hawkish as to what he's saying. They do say that tariff effects on inflation could be temporary or could be persistent. Time will tell. I think the reason why the market sold off a bit was because he did come out and say that he finds dual mandates in tension for now. For the time being, well positioned to wait before policy adjustments. And let's see.
So we had 3 months of payroll inflation readings since the holidays of January 3rd, and that's of course not even what the news. Part of that is due to services, core services, both housing services and non-housing services have really been grinding down toward levels that are consistent with 2% inflation. So that's a good news. We've had
So he's saying that the inflation is heading to 2%.
yeah, of course we expect, as you point out, we do expect to see more of that over the course of the summer. It takes some time for tariffs to work their way through the chain of
Takes time for tariffs to work through.
A good example of that would be visiting a study that retailers today may have been employed several months ago before tariffs were applied. So we're beginning to see some impacts, and we do expect to see more of them over coming months. We do also see price increases in some of the relevant categories like personal computers and digital equipment and things like that. That are considered tariff increases. In addition, we look at surveys of businesses.
So he's basically saying that inflation can pick up, and he's seeing that happen.
But many companies do expect to put all, but some or all of the effective tariffs through to the next person in the chain. So today, the realities along the tariff effect, some of the tariff effects, the duration of the time that they were all highly uncertain. So that is why we think the appropriate thing to do is to hold where we are as we learn more. And we think our policy strength is in a good place where we're well positioned to react to becoming.
So he is trying to be dovish. So my bet is that the market will take it nicely unless and until he comes out and says some crazy stuff. For the time being, the Fed is well positioned to wait before changing interest rates.
But we can't just assume that we don't know that. Our job is to make sure, one of us is to make sure that one-time increase in inflation doesn't turn into inflation problem. And that is that will depend on the size of the effect, how long it takes to become inflation expectations.
Yeah, I'm just going to put in some of those comments into the chat so it's easier for you guys to read as well if I'm just listening in.
If you look at the rate path starting in December, adjusted over full time horizon, you got there. You're thinking about the year, obviously, and you ended up on the that result of potential therapeutic inflation,
Good question. They're asking him why is he on a slower path.
It's hard to we didn't see people moving their long term, after they moved to it, for example, at this meeting. So, and those things are probably still doing. So I agree with what's happening. Since March, this is since March, right? You see a slower growth, it's a tiny tick up, it's a one-time tick up in and you see inflation in that region. And by the way, it's still from December as you see the March. So that's what you see. You see the effect of that.
That's the thing, right? If he keeps emphasizing patience in the opening statement, if the labor market starts getting weaker and weaker, they will be behind the curve.
We're adapting in real time, and what you see is
Accumulation of individual assessments. Great. You should see all the comments come up for there, so I'm just trying to put it in there so you can then go ahead and read it in as well. If I'm just listening to what he's saying.
Uncertainty about the economic outlook, but communicating rather many further and that's actually the field. to the public. I'm going to reject that. I think, no, but if you think about it, fear of uncertainty, uncertainty really is key. And since that it has come down, that's really what that's what technology is doing. It's still all, but it's uncertainty. I think that's enough.
So he's on the path of saying that uncertainty has reduced, which is what we've been seeing, but not really that important at the moment.
More immediately, inflation is continuing to cool and expected to roughly 2% of price growth. And I guess they also need to discuss the fact in the job market, growth higher than growing, concentrating the food industry, issues some positive data, including this morning, looking at EV, ECV concerns that the economy is being measured to cut rates going forward. So we do of course monitor all these things. I think if you look at the overall picture, what we're seeing is 4.2% unemployment, the economy is growing at a rate hard to know given the unusual flows in the first quarter. They get used to be 1.5%, a little better than that. Some of it has come up off of this very low levels. It's still depressed. So you can point to things. The housing market is a longer run problem and also a short run problem. I don't think it's indicative of physical situations. We have a shortage of housing, and we also have high rates right now. I think the best thing we can do for the housing market is to restore price stability in a sustainable way and create a strong labor market. That's the best thing we can do for housing.
So I don't think they're going to be helping the housing market by lowering rates. That's not happening.
Wages, job creation, they're all together. I would say you can see perhaps a very, very slow continued cooling, but nothing that's troubled. I think we want to stay very careful. So overall, again, the French economic policy is well positioned for responding to economy wages. So for now.
Well, the market's been moving up and down. So about 50 points there, 10 points on the S&P. So. So we'll keep a watch on this. Do expect to see increases in relevant categories like personal computers and audiovisual equipment. And things like that are attributable to tariff increases. So they're still saying they're data dependent. I mean, they're not changing that at all. He's saying longer range dot plot assumptions not much use in period of uncertainty, which is what I've been saying as well. Yeah, how many months does it take for you to get confirmation that uncertainty is out and you can start cutting rates? I still believe that the labor market is strong. I don't know what they're seeing there, but Economy appears to be growing. Let me put this in as well for you guys. So I'll just type this in so you guys get some more information as well. Yeah. I think they're saying that they learned in April after the March meeting that substantially higher tariffs were likely, and since then the estimates of where the tariffs will be have actually moved back down, although still at elevated levels. Again, Friday you're going to be having options expiration, so that's going to be quite volatile a day. So keep in mind that is also something that could be happening. So usually you see a sell-off after his speech. Let's see if today is that kind of a day. I think there's like the Iran-Israel thing has been taking more precedence than the FOMC at the moment, and for rightful reasons. He does come out and say that it's likely that they will get to a place where rate cuts are appropriate. Anyways, it looks like for the current period we're good to go. Let's see what happens with the closing. Anyways, guys, so my thanks for tuning in. We should be going live again on Friday before market opens, unless something crazy happens in the Middle East from now till then. So enjoy yourselves, have a good night, and take care of yourselves. Thank you.